Hello, economics students. Today we're going to continue getting ready for the stock market game. And what we're going to do today is learn how to read the stock quotes that you will find on the website we discussed in our last lesson, that www.finance.yahoo.com. Remember, yesterday we looked at how to find a ticker on finance.yahoo.com. And we learned that in order to purchase a stock, you need to know what that ticker is. So today we're going to see how you can glean some very, very useful information on a particular ticker, on a particular stock, using finance.yahoo.com. Now, what I'm going to suggest that you do, if you look on today's canvas, you'll see right here, stock listing info, right there, just below the link to the video. I would recommend that you click on that stock listing info attachment and go ahead and print that out. I think it will make this lesson easier if you have a copy of that in front of you, and you can go follow along with me as we go over the information on the stock listings. I've already got that ready here, so if you want, you can pause this video here, print out the stock listing sheet, and then start up this video when you have that ready. Alrighty, I'm going to go ahead and click on the stock listing info sheet right here. This is the information that you get from finance.yahoo.com. I actually took this information in the summer of 2021. So the information I'm showing here is different than what you will find today. But what I have is stock listing info for Coca-Cola Company. Here we have the ticker KO. Okay, remember we would type in Coca-Cola and figure out then which listing is the one that we're interested in. You can see here that Coca-Cola is listed on the New York Stock Exchange. NYSE stands for New York Stock Exchange. Remember, in order to invest in a stock in this game, that stock has to be listed either on the New York Stock Exchange or on NASDAQ. Okay, so let's look at the information that we have. I've got all this information defined for you down here in the bottom part of the attachment, but we're going to go over all of this right now. Previous close. That means that Coca-Cola stock closed at $50.48 per share on the previous trading day. Okay, that was what the stock ended at yesterday. Today, Coca-Cola opened at $50.94. So that's kind of a good sign for the day. It's opening a little bit higher today than it closed the previous day. Next, we come to bid and ask. Sometime at the start of the day, middle of the night, something like this, there was a broker who went to someone who owns Coca-Cola stock, and they said, hey, we'll buy 2,200 shares of Coca-Cola stock for $50.81. The brokers who were representing the owners of that stock came back and said, I tell you what, we're willing to sell 1,300 shares for $51.24. So the bid price and ask price are a little bit different. At some point early this morning, they came to an agreed upon price, and that price on the first opening was $50.94. So there were some negotiations that took place between stockbrokers that came to that opening price for the day. Here we have the day's range. This is the previous trading day's range. So Coca-Cola changed price constantly throughout the day from a low of $50.28 per share to a high of $51.47 per share, and then ultimately it closed at $50.48. Here we have similarly the 52-week range. Now remember, I'm looking at old data. This data is from, I believe, early September of 2021. So this is significant. This is a big range, but it's not unusual. You would have had a big range like this in the year of COVID. But the 52-week range, Coca-Cola sold as low as $36.27 and as high as $60.13. A big range for the 12-month period. Next up, we come to volume. That's the number of shares that were sold the previous trading day. So yesterday, there were 19,610,000 shares of Coca-Cola stock that traded hands. That's a big number, but that's not an unusual number. For great big companies like Coca-Cola or Apple or Microsoft or AT&T or John Deere, Caterpillar, all of these really big companies will have a huge volume in the millions every single day. When you see a company that has a low volume, that's probably a pretty small company. And by low volume, I mean in the thousands or hundreds of thousands. Average volume. Last year, on average, 15,945,000 shares of Coca-Cola stock changed hands every single day. So that's a lot of shares of stock. On average, nearly 16 million last year. Let's go up here to market cap. This is an important number. Market cap stands for market capitalization. And this is the total value of Coca-Cola stock. It's based on the price of the stock, $50.48 on the previous day, times the number of shares of stock outstanding. So if I were to take that 222.323 billion and divide it by 50.48, that's going to get me a number close to the total number of Coca-Cola shares that are available to be bought or sold. So market cap is basically the value of a corporation. That's a good way to look at it. And again, on these big companies that you're likely to be investing in for the most part, you're going to see a market capitalization usually in the hundreds of millions of dollars. Not all of them, but many of them will be. And a few, like Apple Computer, will be over $1 trillion. The beta, I think, is an important number. Beta is a measurement of risk. And what a beta does, it compares the stock to the average stock on the S&P 500. And remember, the S&P 500 is one of those indices that we discussed in our previous lesson. Now, if you have a beta of 1.0, that would be an average stock on the S&P 500. A beta of 1 is an average stock. And that would mean that, let's say the S&P 500 increases in value by 5% this year. We would expect that a corporation with a beta of 1.0 would also increase in value by 5%. We would anticipate a company with a beta of 1 to fluctuate exactly the same as the S&P 500. Now, is that how it really works? No, it isn't, because there are external factors that are out of control of anyone. No one could predict, for example, COVID. And COVID hit certain companies, certain industries, much harder than other industries. So, you can't predict that, is always going to be the case by any means. It won't be. There are external factors, but it is a useful measurement of risk. And here's how I would use that. Let's say that you anticipate that the stock market is going to do really well this semester. You anticipate a very robust, healthy, growing economy, a healthy, growing stock market. You would probably want to find companies to invest in that had a beta greater than 1. You would look for high betas. Because, for example, if I have a corporation with a beta of 2.0, then I would expect if the overall stock market is going to increase by 5%, if I have a beta of 2.0, then I would anticipate that my corporation with that high beta would increase in value. Its stock would increase in value double the rate of the S&P 500. That is, if the S&P 500 grows 5%, my beta is 2, then I'm probably going to grow 10%. So if you think the economy is going to do well this semester, look for high betas. On the other hand, the economy may not do all that well. Some people think we might be on the verge of a recession. Not everyone agrees, but some do. If you're one of those that believe we might be on the verge of a recession, that would mean that we would anticipate stocks to go down in value. We would anticipate that the S&P 500 would lose value. In that case, you want to find corporations that have a low beta, a beta less than 1. Coca-Cola, does that fit the bill for that? Indeed it does. Coca-Cola's beta is 0.55. That means that if the S&P 500, say, were to lose 10%, then we would think that Coca-Cola would only lose about 5.5%. Coca-Cola, although losing value, would lose value much less than the average corporation. So that would be a good investment then in a bad economy. Now let's think about that. Why wouldn't Coca-Cola be as harmed by a downturn in the economy as other corporations? Well, if we should, people start losing their jobs, are they still going to buy Coke? Are they still going to go to McDonald's and buy a Coke with their Big Mac? Yeah, they probably will. Okay, so people will continue to buy Coca-Cola, maybe not quite as much, but they will buy Coke even in a bad economy. On the other hand, if the economy does really, really well, the economy is booming, are people automatically going to buy a whole lot more Coca-Cola, causing the Coca-Cola stock price to go up? Not really. The fact that the economy is really doing well doesn't mean you're going to go buy more Coca-Cola than you otherwise would have. Again, you might buy a little bit more, but you're not going to buy significantly more. So the health of the economy really doesn't have a big, strong bearing on how much Coca-Cola people buy. Okay. Next up is PE ratio. That stands for price to earnings ratio. This is the price of the stock divided by the earnings or the profit of the company. Okay, so if you have a high PE ratio, that means that people are very bullish on that stock. That means that people think this company has a lot of potential for future growth. Their earnings might not yet justify that high price per share, but the investors believe that the future earnings will. Okay, a low PE ratio means that the earnings are kind of low compared to that the value of the stock is low compared to that company's earnings. Okay, so what does this mean for you? If you have a low PE ratio, and by low I mean less than 20, okay, a low PE ratio means that a lot of investors are worried that this stock's future is not particularly good. However, a low PE ratio could mean that it's time for that stock price to go up. Maybe the price of the stock is undervalued based on that company's earnings. So you might think about that. It's risky, but it is information that you might find useful. On the other hand, a high PE ratio, let's say a PE ratio over 100, some people would think, hey, people think this stock's going to do great. Let's invest in them. But others might say, I think this stock is overvalued based on the earnings, and it's time for the value of that stock to go down. A high PE ratio could mean that the price is overvalued, but it could also mean that people believe that that price of stock is fair, representing the potential for high future earnings. So again, it's hard to use it as a predictor of how the stock's going to go, but some people do. PE ratio. To me, a PE ratio between about 20 and 40 or 50 is a good PE ratio. Once it gets higher than 50, I start to get a little bit worried that the stock could be overpriced. And if it's lower than 20, I worry that maybe this company's future isn't all that great. Okay, EPS stands for earnings per share. So I would take the total earnings or profit of the corporation, divide it by the number of shares of that corporation, and that gets my earnings per share. Every share of Coca-Cola stock earned $2.12. That's what that tells me. Then you have the earnings date. This is when the corporation is going to declare earnings. Again, this is old information, so it's going to look a whole lot different. Obviously, they're not going to be declaring earnings in 2020. But that's the date of the next earnings report. That's good to know because a lot of times that's a very volatile time in trading stocks. And if the earnings report comes out higher than what investors were anticipating, the price of that stock is going to go up. If the earnings report comes out lower than what people were anticipating, then the price of the stock will likely go down. Next up, we have the dividend and yield. 1.64 means that Coca-Cola, for every share of Coca-Cola stock, Coca-Cola paid a dividend of $1.64. That means that if you owned one share of Coca-Cola, Coca-Cola paid you cash $1.64. A lot of big corporations do pay out dividends, so that's a good thing. When companies pay dividends in this game, the dividend will be reinvested in that company's stock automatically for you. But dividends are a good thing. And then we have when the date the dividend will be declared. And finally, we have what Coca-Cola anticipates their price will be in a year. Again, if they meet that anticipated rate, their stock will do good next year. So that's it. Check Canvas for your assignment, and we are done for this today. Talk to you.